Hi, and welcome to the Stock Scores Market Minutes for June 4th, 2018. This week, my topic, don't have remorse. As traders, we are constantly making decisions about what trades to take. Now, those decisions should be based on the rules of our strategy, something that we have proven works over a large number of trades. Now, good decisions, the ones that follow the rules, do not always lead to good results. What's important is that when the results don't work out the way you expect, to not have remorse and think that you have to change something. You really should only change the rules of your strategy when a large amount of data tells you that changing the rules will have a positive effect. Let's get on to this week's market analysis. Here is the chart of the S&P 500, 30-day, 60-minute chart. And we had some selling pressure there, and then we bounced right back, and we've basically stayed in the pattern that we were in last week. We just had that brief little dip below it. That means that the market is building a base, and given that the trend into the base was up, I would expect an upside breakout soon. But until we can make that break through 274, don't get too optimistic. Nonetheless, it should happen soon. On the longer term chart, and one of the reasons I think we will get an upside breakout is because this pullback line was broken 4 weeks ago, and we've been building rising bottoms over the last couple of months. So there's optimism building. We bounced off of the long-term upward trend line, bounced right there, now building a rising bottom, and I expect to get a break to the upside, and that should take us back to the highs. Will that happen on Monday, or will it be 3 weeks from now? Hard to say. You got to wait for the break on that intraday chart. Moving along to the Russell 2000, which is actually outperforming the S&P right now. It's been steadily moving higher at all-time highs this week, and we are seeing more action in the small cap stocks. I wouldn't say a lot of action yet. We're kind of early stage for that market, and that's a good thing. That means there's still more to come. But it is encouraging that this chart is moving up from left to right. Canadian market saw some profit taking as oil weakened, and of course we also had some turmoil in the banking sector with what was going on in Europe. But right now we have this pullback. We broke the pullback. Now we're building a rising bottom, and we'll have to see now if we can break up from that rising bottom and get back to those highs. If that happens, we're still stuck in this range below resistance. You can see resistance right there, and until we can get through that, we shouldn't get too optimistic. But it is encouraging that we are just making a little bit of a pullback and not a more substantial one, having broken that pullback line on the intraday chart. Moving along to the TSX Venture, this market suffering a little bit, I would say. We had an upward trend line that was broken. We've been in a downward trend for some time. This week we started to tickle through some floor prices again. One thing to keep in mind is that the speculative market, which is what the TSX Venture is, I suppose, tends to get pretty quiet in the summer, and we tend to drift lower. So that's part of what we're seeing. You can see the volume dropping off. Wouldn't get too worried about it because it is normal for this time of year, but at the same time, you should be cautious with those TSX Venture stocks. Well, we had a little bit of a bounce in the bond market the last 2 weeks, and that has brought interest rates down a little bit. Earlier this week, they were looking like they might try to break through that ceiling, but they failed. And so we're still really in kind of a pessimistic situation. The downward trend line, you could argue, was broken, but it's not in a real strong break. Earlier this week, it looked like it might be a strong break, but it really failed to hold those gains. And so I still think we're in a situation where interest rates are more on the side of going up than down, but not strongly so. Onto the US dollar, which has had a pretty solid run the last couple of months. But this week, it hit a new high and closed below its open on pretty strong volume. That is a sign that the buyers are getting tired of the US dollar, and we are probably going to see a little bit of a pullback near term. So don't be surprised if we see at least a couple of weeks of weakness in the US dollar near term. That should be supportive for gold, which has been drifting lower over the same period. Perhaps if the US dollar weakens, we'll see this come up into here, but don't get too excited until we can break out through that long-term resistance, which is held up for some time. Oil market is seeing some profit taking. It's almost through the upward trend line. It's basically retraced back to it. So my expectation is next week we should bounce off of the trend line, much like it did there. But until it does, I want you to have a little bit of caution, because there was some selling pressure this week. We've come back to that upward trend line, and we could break it next week, although we are due for a little bit of a bounce back because of the weakness the last couple of weeks. On the fear chart, we had that little spike in fear on Tuesday. Didn't turn into much. We're back basically at the levels we were coming into this week. You know, there's always that nervousness in the market that we've had lately because of that correction. We're still at elevated levels compared to where we were at the early in January. So be cautious, because this fear chart is telling you investors are nervous, but the general trend is falling tops, which means declining fear, and that is a good thing for stock investors. So my outlook then, I remain bullish on both time frames for US stocks. We could see a break soon. Canadian stocks neutral on both time frames. Gold neutral long term and bearish short term. Oil neutral on both time frames. I've lowered my rating to neutral long term because we are testing that upward trend line. That could easily change back to bullish next week. It could also go to bearish if we break the trend line. US stocks remain in a short-term sideways range, and that should resolve with an upside breakout soon, but wait for it, watch for it, look for that 274 zone to be broken on the SPY. Canadian stocks are stalled at resistance, held back by oil weakness and a little bit of the banks as well, and that's now threatening its upward trend line on oil. Gold remains out of favor. Fear continues to drift lower. All right, this is the trade of the week, and this is where I want to talk about having remorse about a trade. This is a trade I passed on, and there's reasons why I passed on it. The stock has been going straight up for a number of months. If you go look at the daily chart of Lulu, you'll see that straight up. And then today we had a very large gap to start the day. When you get large gaps at the end of upward trends, they are often exhaustion gaps, and they often lead to a fill of the gap. So for those reasons, I passed on the worm trade. You can see my pink dot there. Strong volume, a lot of the things I look for, but the daily chart told me that this was not a good reward for risk trade-off. Well, as it happened, it made a 4-to-1 return, much better than I expected, but that does not mean I should go in and change the rules, because most of the time when stocks make big gaps after trending higher for some time, they just don't get great follow-through. On this one, it got pretty good follow-through, but I'm not going to change my rules because of one trade. Well, that has been the Stock Scores Market Minutes. Hope that you've enjoyed the video. If so, click on that like button and hit the alarm button as well. That will give you email alerts as soon as I upload a new video. Have a great week in the market and trade well.